The industrial sector has a strong seasonal period from January 23rd until May 5th. Overall, on average over the long term, it's outperformed the S&P 500 in this period. It's also underperformed the S&P 500 at the beginning of January, from January 1st until the 22nd on average. And that's exactly what we've seen this year. We've seen underperformance of the industrial sector at the beginning of January, and we start to see this uptick of industrial sector performance relative to the S&P 500 in the last days of January and into February. That's good news, because we're just starting the strong seasonal period for the industrial sector, and it still has a ways to go as well. So today I'd like to take a look at the seasonals for the industrial sector, as well as the price performance of the sector as well. So I pulled this chart here from my Thackeray's 2021 Investors Guide, and this represents the performance of the industrial sector, and we compares it to the S&P 500, and this is the time period from 1990 to 2019. If we take a look here in the month of February, you can see it tends to be strong. The cross represents the median for the industrial sector, and which is substantially above the diamond, which is the mean for the S&P 500. In the bar, it represents the mean for the industrial sector as well. You go into to the month of March, once again we see the mean above the S&P 500. We go into April, we see the mean once again above the S&P 500, and we start to take a look at some of the other statistics here. You can see that on average 63% of the time it's positive, and 60% of the time it has outperformed the S&P 500 from 1990 to 2019. In May, you can see here that things start to change. The median is above the S&P 500, but the mean is below as well. In this case, the industrial sector tends to perform well at the beginning of the month, and the performance relative to the S&P 500 tends to dissipate after that. So we still have a long ways to go in the seasonal period for the industrial sector. We've really just started it, and we're starting to see some positive signs as well. I want to get into that here. If we take a look at this graph here, the top panel represents uses the ETF XLI that trades in the US to represent the industrial sector. And the second panel is the industrial sector's performance relative to the S&P 500. When the line's going down, it means the industrial sector is underperforming. When it's rising, it means it's outperforming. And this is what I want to concentrate on. You can see here that since May, we've seen this outperformance of the industrial sector relative to the S&P 500 into November and into December as well. But once we got to December, we start to see this underperformance. And as I said before, in January, for most of January, you tend to see this underperformance. That's what we've seen this year. But look what's happened just recently. We started to see this uptick here of the sector relative to the S&P 500. And that's a good thing, because if you take a look here, we go back and draw this line all the way back here. On a relative basis compared to the S&P 500, we're really back to where we were at the end of October, before we had that big risk-on move. So it's not like the industrial sector has gone roaring ahead with the reflationary trade at all. It actually went up and has come back down, representing relatively good value compared to at least the point from the end of October. So right now, we're just starting the strong seasonal period for the industrial sector. We're starting to see an uptick, and if we do see a reopening of the economy, and if it does happen faster than investors are expecting, the industrial sector could be one of the beneficiaries as well. So the industrial sector is definitely one of the sectors to be taking a look at this time. Thank you.